Keep an eye on a bunch of stocks. Most notably, the food delivery, quick commerce sort of stocks are ones will be on our radar. Of course, we've been telling you that Zomato has launched its 8,500 crore rupee QIP. The stock ended higher yesterday. The price, the indicative price, is close to around 7% discount to what it was as yesterday's close. So that's something we'll be watching out for. On the other hand, keep an eye on Swiggy as well, because there is an interesting initiating coverage report that is coming from UBS on Swiggy. They've initiated at buy with a target price of 515. Remember, the issue price for Swiggy was close to around 390 odd rupees itself. They say that it is well positioned for growth at a 35% discount to Zomato. Remember, Zomato versus Swiggy, when the issue was launched, it was offered at a near 55 to 60% discount. So they believe that this discount can narrow all the way up to 35%. In the online food delivery business, Swiggy has been catching up to Zomato on both margin as well as scale. Quick commerce, they have a lot more work to do, even as there are encouraging signs. And these are not my words, these are UBS's words. And they are expecting Swiggy's online food delivery GMV to grow pretty much similar to Zomato, which is in low 20s, with adjusted EBITDA margins reaching 2.8% in FY27. Remember, the company has told us that steady state margins, adjusted EBITDA margins for the food business could be all the way up to 5%. So that's something we'll have to watch out for. The most important thing to track, though, is increasing fundraisers and competition in the quick commerce space. Quick commerce will be the growth and the valuation driver for both Swiggy and Zomato, as it has been for others as well. But just look at, what's happening in the quick commerce space. Swiggy itself raised about 4,500 crore via fresh issue in IPO, looking to open a bunch of dark stores, almost 1,500 with the amount that they've earmarked for that. Zomato has launched its 8,500 crore rupee QIP, saying that there is competition, so they'd rather have some cash on their books more than what they already have. It was just last week that Zepto raised another round of funds, $350 million raised from domestic investors. Both Zomato and Zepto looking to increase their proportion of domestic shareholding. And it was just recently that Amazon announced its quick commerce foray as well. So the battle for space is rising in quick commerce, both from a customer standpoint and an investor standpoint, with the kind of money that they've been using. So we'll just keep an eye out on that. But
for the time being, let's keep it with the quick commerce space. Manglam was just telling us about a bunch of views that have come in on the street on stocks like Zomato and, of course, Swiggy as well. Plus, Zomato is out there to raise, about $1 billion. Karan Taurani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital is with us. Karan, great to have you on. Thanks for joining in. We know you've been very positive on Zomato. I think in the last note after the Q2 results, your target is about 320, if I'm not mistaken. But the pitch is getting very interesting, right? Because there's a giant that's about to enter, a giant with plenty of money and muscle power, Amazon Quick Commerce. First thoughts, and then we'll come to individual companies, Swiggy, Zomato, the fundraising, all of that. Opening thoughts.
Hi, Survi. Good morning. So if you look at the quick commerce business, it's very different, compared to the food business. There's a very large target addressable market over here. Potentially, if you look at the quick commerce business today, it's only about 3.5% of India's e-commerce market, right? And there are only certain categories which go very well in terms of quick commerce. Majorly that's FMCG, grocery. Then there is, some categories like, gifting. Then there are other categories in terms of, the apparel accessories which are there, the kids category, the games category, everything put together, beauty, personal care as well. So there are certain categories which will go to, quick commerce in a very rapid manner. And that is why, I think there is ample headroom here for more players to coexist. Unlike in the food business, wherein, the smaller fringe players were, kind of bought out and, Zomato, Swiggy became duopoly, and that's how they're controlling more than 90% of the market today. I think quick commerce is going to pan out in a very different manner because we are very small right now, firstly, in terms of the share. Secondly, we haven't even gone to the non-metro markets, right? So in terms of category penetration, in terms of market penetration, there is still headroom for this business to grow by 50% plus for more 5 years, 7 years, even 8-9 years put together.
Karan, I completely take your point. Karan, allow me to come in over here. I completely take your point on the fact that there's under-penetration. It's such a long way to go, right? Tier 2, Tier 3, the whole opportunity. But my simple question is this. Last time I ordered something on Swiggy, Instamart, or I think maybe it was food delivery. I don't remember what it was. But I clearly remember the platform fee being 10 rupees. And that, in a huge way, was a big turning point. It was an inflection point when these platforms started charging that fee, right? Now, if Amazon tomorrow comes in, slashes platform charges to some 3 rupees or 2 rupees, I mean, there could be major disruption. You can't rule that out, can you?
Yes, of course. I think there will be disruption. There's no doubt about it. You might even see increased discounting by some of the players. But the good news is that the moat of this business is not about discounting. A customer will not move from one platform to the other just purely basis discount. They would also want the delivery, the good experience within 10 minutes, 15 minutes in terms of lead time. And plus, you have to watch out here in terms of where the stores are located strategically, in terms of dark stores, the locations, the product, the SKU range, everything put together, right? The kind of user experience, the kind of technology, the kind of system that you have on your app in terms of any kind of issues from the customer side. So clearly, it's an end-to-end game. It is not only a purely discounting game. E-commerce was a discounting game 7-8 years back when it took off, but this is not a discounting game. I think people have kind of moved to online now, and now they are really demanding more in terms of online when they want rapid delivery, and they are willing to pay the price for it. So yes, I think some minor discounting can go up, but not in a big manner because that's not the key mode. Secondly, in terms of the larger players like Amazon, I think clearly Zomato strategically is raising money purely for that reason because they want to prepare for a war chest. And I clearly believe that all players will coexist. You can probably see that some kind of growth rates can become lower here and there for other players put together. Some players can kind of gain market share. But because the market growth potential is huge, I think there's opportunity for 3, 4, 5 players to exist in this market, and all of them will grow well for the next 3 to 5 years.
That'll be interesting, 3, 4, 5 players, because most on the street are expecting 2 players to exist with some strong regional players itself. Be that as it may, Karan, like you said, it is a function of not just the discounts, but the assortment availability, the entire overall, edge that every platform has on the other when it comes to execution and the overall experience. Amidst all of this, where do you see your pecking order when it comes to investments? Zomato, do you think, will still continue to lead? Because over the last few months, we've seen Zepto nearly narrow their share when it comes to Zomato in the quick commerce space, and also in some places be market leaders. So on Zomato's Blinkit leadership is something that I want your thoughts on. And secondly, Swiggy as well. What do you think Swiggy should trade at as a sustainable discount to Zomato?
So firstly, I think in terms of the broader quick commerce market, we clearly believe that, Blinkit could sustain their market leadership over the near to medium term. There could be some minor losses of market share, maybe a couple of percentage points whereabouts. But I think the market leadership position will remain with Blinkit, given the kind of SKUs, given the kind of strategic markets that they have, the Delhi NCR market where they are phenomenally strong, and they are trying to dig deep into the non-Delhi NCR markets as well. So I think there is very low probability that some other player emerges as a market leader. I think the fight is going to be here more with the other players versus the new players which are going to be there. And Blinkit, no matter what, could be able to sustain market share, given the kind of track record we've seen, the SKUs, the execution, everything put together. Now, the second thing is in terms of discount narrowing between, Swiggy, Zomato, which is Swiggy, Instamart versus the Blinkit on the quick commerce side. The big gaps here are clearly take rates and AOV. Right, and AOV is a function clearly in terms of your strategic markets, as I told you, the kind of SKUs you have. The more you move, beyond the FMCG grocery category, AOVs tend to go up. Right, so from that standpoint, Swiggy and Instamart need to work a lot more harder in terms of getting AOVs higher. The gap between AOV, between the market leader and the other players is about 25 to 30%. So it's quite a substantial gap. It may take some time, and also it's very tough to execute over there. The second thing is around take rates, right? So if you look at the take rates, I think Blinkit, just like Zomato on the food business side, they've been very proactive in terms of generating ad revenue. So, ad revenue is a function in terms of the customer traffic, in terms of the market share, in terms of orders throughput, which really drives your profitability and your growth as well, and even the take rates for that matter. So I think ad rates, platform fee, these are levers which are there available for the quick commerce business as well. And as you keep going larger, your bargaining power with the brands is going to increase, which means you can even have better take rates versus competitors. So these are clear levers for Blinkit, which will remain. Instamart discount, might converge on all these metrics, but it will take some time for this to happen.
You don't have official coverage, right, on Swiggy, Karan?
We don't have active coverage on Swiggy as of now.
Okay.
All right. And just a final question. Have you penciled in any sort of private labeling coming in for quick commerce? Because some of them have made investments in private labels as well.
Yeah, so I think those are all try and test models. I think those players will also come in. They might even, push discounts to a certain extent. They might try to make inroads, and eventually they might just become acquisition targets by the larger players. So I think the worry is not about fringe players. The worry is about the larger players here. As I told you, because in the food business, you don't have players which could be, kind of bought out. But in the quick commerce business, all these are conglomerates. I mean, Amazon, Flipkart, if they get deep into the quick commerce business, it'll be tough for, buy them and do acquisitions. So that's why I think 3, 4, 5 players will coexist in the quick commerce business in the medium to long term.
Right, take that point, Karan. Thank you so much for joining in and giving us your views on the stocks. You believe that Blinkit will still continue its edge despite the emergence of new players and the others raising funds, etc. as well. This 8,500 crore rupee war chest will only keep them healthier in the fight in the quick commerce place, where you do see about 4 to 5 players exist fairly okay in the next few quarters, at least the next 4 to 5 years, given the sort of penetration that there is, which is at a lower level. And